In this episode of The Bear Roars, Dan chats with Colorado investors Josh and Jason Chapman, co-founders and managing partners of Konvoy Ventures, a venture capital firm focused on investing in the online gaming industry. With deep expertise in gaming, technology, and capital markets, the Chapman brothers have built Konvoy into a leading investor in early-stage gaming startups worldwide. Konvoy is known for its strategic insights, hands-on approach, and commitment to fostering innovation in the gaming ecosystem. Let's poke the bear to kick off the conversation.
All right, we got Jason and Josh, the brothers Chapman. What are you guys doing as investors in a tech industry? And you're not in Silicon Valley, you're not on the East Coast, you're right here in Colorado. How'd that happen?
Well, I'll tell you how we got started as a firm, and
Okay.
then I'll let Jason say why we chose Colorado.
Sounds
So
good.
we started the firm in 2017. We were both in New York City at the time, and we had this idea of there was a lack of dedicated investment management around the video gaming industry. And so we looked at that and we thought, this is one of the largest entertainment industries on the planet. There's over 2.6 billion people playing video games. Why the heck is there not any dedicated investment manager around it? And that was in 2017. And since then,
That's shocking because by 2017, it was a well-developed industry.
it was.
So there weren't any other kind of investment funds that were focused on
There were just
gaming?
a couple, but most of it was really wrapped up into broader consumer funds, especially in Silicon Valley.
like one of several sectors they focused, but none that really zeroed in on that.
Exactly. And so
Wow.
we were like, hey, this
That's
sector
surprising.
is getting massive. Why don't we take a crack at this? And
But
so,
why you guys? What background did you have to even think anyone would give you money to go invest in that area?
So we
That's
grew
a
up.
great question.
That's a really good question that was hard to answer 7 years ago and was easier now. But we grew up as video gamers our whole lives. And then I was at BlackRock and Morgan Stanley. Jason and Jack, who we also started the firm with, were from IBM as software engineers.
Okay.
And we thought that together we could analyze software, tech, and platform plays around video gaming, probably better than most.
And that's interesting. You said software, tech, and
Mhm.
platform plays. You didn't say content.
That's right.
You focused on the infrastructure of gaming,
That's right.
the tools of gaming.
Our thought was, hey, we don't know whether Halo or League of Legends or Fortnite is going to be popular tomorrow or not, but we do know that this wave is unstoppable around video gaming. So let's take a crack at the platforms and technologies that will basically ride that wave no matter what.
So you did all your work and you came to the conclusion that you're going to put all your money in NVIDIA and you put it in there and you held it through to this day. Is that what you guys did?
Exactly. That's exactly
What I wish we'd done.
That would have been really great. So yeah, but that's how we started the firm. We then started with this weekly newsletter, and that really spawned into Fund 1, which then led to Fund 2, and now we're investing out of Fund 3. But I'll let.
So let me before we go there, some about the newsletter, because investment firms, when you talk to them, they all want a platform. They want their own. We need a platform. I think a lot of people don't understand what platform really means. The ones that are trying to develop them do, but the general world. What is a platform to an investor, and how did that newsletter begin for you guys? What became your platform?
Yeah, Jason, why don't you?
Yeah, so you give me the tough questions.
Yeah,
I love it.
exactly.
For us, Josh and I have always had this opinion that if you cannot defend something in writing, you don't actually know what you think. And so we wanted to practice this by writing about not just regurgitation of news, but an opinion on a sub-thesis that we're looking at. So what does it look like to reinvent or rethink gaming engines or game distribution or advertising in games? Let's take a crack at it. And half the time we have something interesting to say. Other times we've had many people respond and tell us we're dead wrong with our takes. But our whole point and whole position is take a stance, right? Do not just regurgitate and take the middle line. Don't be Switzerland. You're either on the left or you're on the right. Make your call, right? And that's been our position from day one. And I think a lot of people found value in people actually saying something. There wasn't a lot of sophisticated writing at the time in games in particular. And that's how we started. We still continue to this day. We release on Fridays every single day, which Dan, thank you for being a subscriber. We appreciate you.
Yes, I am. Have been.
We appreciate you. And what we do is we pass the pen. There's a person on our team each week that is point on the newsletter, and the entire investment team reviews it. And it's really important to our process. And that has sort of been I'd say the belly of what got us going from a deal sourcing perspective, a thought leadership perspective, And it's something we honestly value as much for external purposes as also for internal, I'd say, refinement of our thoughts.
Yeah, because if you know you're going to put it out there, it really forces you to reckon with what you're saying. And thought leadership, when we talk about platforms are often thought leadership. I think one thing in this area that Brad Feld taught a lot of us, I don't know if you guys were influenced by him as well, but he put himself out there as a thought leader early and often.
Absolutely.
And with that, helped develop the investment community around here. So in this newsletter, in your thought-provoking pieces, what are a couple of the more memorable ones on the positive side? And are there any memorable ones on the, boy, we have to go back and rethink that one side?
I think one of the hottest takes we ever had was when we called out that Discord as a company, the social messaging platform, is one of the most under-monetized assets in all of technology globally. I think when we called that out probably 3-4 years ago, it's not very popular to go after them because they are.
Because they have a way of going back at you. Just use
they
their platform.
They haven't, but
they're also beloved by like all gamers.
Yeah, all gamers love
Discord.
Yeah, they love Discord, and so to go after Discord and say, you haven't monetized this well enough, I think was unpopular. It turns out that over the last 4 years, we were right, and they started prioritizing monetization through their premium subscription called Nitro.
Yeah. But that's not a bad message for them to hear, because early in your history, they were what probably started in
I think Josh,
2014 or somewhere like that.
Josh is presenting it in a very nice light. We essentially called them out for giving away their product for free foolishly. They shouldn't have done that.
It's probably their subscribers who were mad at you. Not Discord probably said thanks. We were trying to figure out a way to start charging.
Exactly.
All these greedy venture capitalists told us to start charging money.
Yeah, exactly.
That's definitely one that was memorable for me.
That was a big one.
Another one I thought of that came off the bat was Josh was playing on this piece. It was really good. That was calling out esports teams as a horrific investment. And at the time, it was very, very fashionable for people to put money into this. Mm-hmm. And it said esports teams are valued as tech companies. And this was really, I'd say, one of the first that blew up and got, I can't remember, it was like 50, 100,000 reads or something like that. It was a lot for us at the time. Mm-hmm. And that got covered by a lot of different news organizations. And it kind of woke up a lot of family offices that in particular have been pumping money into these. And we sort of called out and said, you're never seeing those dollars back. Mm-hmm. And sadly, that is true for most people.
But why is that true? Because obviously teams in sports have turned out to be great investments. The owners always say, we lose money. And maybe on the accounting level they do, but the value of their franchise goes up and up and up. I mean, I think billionaires are created by owning teams. Why hasn't that translated? I'll say yet. I'll be a little provocative. Mm-hmm. Why isn't yet translated into esports?
I'll start off on this one, but it comes down to a couple things. Like in sports, when you have a franchise, you're typically building a franchise around a sport that's been around for a very, very long time. It is very, very difficult to penetrate and make a new market around, let's say, American football, right? Like if you were going to try to create a new league around American football, which several people have tried, and trying to dislodge any sort of, I'd say, market hold of the NFL, that's incredibly difficult. For games, there are games coming out every single day. And so very, very few of these games actually, one, have staying power. You don't have a sport forming every single day. Right. And so I can count on probably two hands the amount of franchises that have lasted over 20 years, which is really when you start to see, I'd say, a formidable title where people can actually invest into the long haul, think around a team structure. Then there's so many issues around who actually owns the rights to that, right? In the sense that there's the person who created the game. They're often terrible at running leagues. Should they run those leagues? And then you have team owners, and it just becomes very, very convoluted. And then also there's an aging out experience for most of these athletes very quickly. You're pretty much irrelevant after the age of 25 as a professional esports player, which is also an interesting thing. And so then you're looking towards young people.
But isn't that, everything you said there, isn't that true, or hasn't it been true with real world sports? I mean, there was once upon a time, there's this thing called baseball and this emerging thing called football, but there was also this thing called soccer and rugby and basketball. And there weren't, franchises back then. There wasn't clear what sports were going to come and replace them in the future. Now, it took a long time, but things happen more quickly now everywhere else than they happened in the past. Why doesn't that solve itself? And even though the players age out, I mean, what's the average age of... I think the main issue is the
competition. It's just what game is popular in 2 years or a year from now is very, very often not the same game. And so I think that there's just such a constant switching of titles, that's difficult. And so you can start thinking of, okay, well, we're going to make a pro esports team that has different teams underneath them. And that's what most of them do. They choose to say, hey, we're going to have a Counter-Strike team. We're going to have a League of Legends team. We're going to have a Dota team. We're going to have a Rocket League team. And then you start to drop those teams as things get popular. But at the end of the day, then it just becomes sort of like a media play, right?
Yep.
There's very little defensibility, and the leagues that you bought into, and the most famous, I think, on this was the Overwatch League. That was a complete disaster. People put $20+ million to buy these seats, and now it's kind of like not even a really that
Just
important
didn't work.
game. Yeah.
Gotcha.
So,
All right.
if you want to add anything,
We will not invest in any.
No, Dan, do
teams
not
or
do that.
leagues.
Do not do that.
And
Write that down.
The only missing part of that is that the team owners missed is that no one owns the media rights around these games, and that really was one of the other key unlocks of no value, right? Of just no one owned the media rights or was willing to give up the media rights to League of Legends, right? And because of that, you couldn't have these massive media contracts, which drove value for all the franchise owners of regular sports, and so that created this real tension between the commercial viability of competitive gaming with a groundswell of gaming that was happening and continues to happen today. So I think that's been the unlock. We don't really expect esports to really take off until that media rights problem is unlocked, because the advertisers want to be in front of this audience, but if they can't really do that at scale, they'll withhold the dollars, and I think that's structurally why there's a problem there.
Makes sense. Okay, so you're in New York.
Yeah.
Working for BlackRock, did you say?
BlackRock, then I was at Morgan Stanley.
And then Morgan Stanley. So you're an investor by background.
Yeah.
For the investor world.
I was a software engineer in the artificial intelligence division of IBM. So
as was Jack.
As was Jack.
As was Jack, your other partner.
Yeah.
And so you guys get together and say, why don't we do this fund?
Yep.
So why did you come here? Did you at first come here to Colorado to do it, or was that later?
So we started sort of, I'd say, working on the concept in New York.
Mm-hmm.
I moved here in 2018, and you pretty much move for one of really two reasons. One is either you got a job or for love, and it was the second. So I married a girl from Colorado. So I married a girl from Eagle, Colorado, and so she grew up there. And I remember we were doing long distance at the time. I was in New York City. She'd fly out every 2 weeks. And she was like, hey, Jason, I can probably live in New York City for a year because there's legitimately more people in your building than my entire county. And I was like, all right, we're going to make the hard call. We're just going to move to New York, move to Colorado. And it was about 6-7 months. And then I forced Josh to move out here too.
All right.
And I was like, hey, this is so much better than living in New York.
And what other investors do you recall were out here? That was only not too long ago. You said that was 2000.
That was 2018, 17.
So that's many years ago, 7 years ago. But still, the investor landscape was developing then, but it wasn't. It wasn't what it is today.
I mean, I remember at the time in the tech scene, you obviously had Foundry and Techstars. That was still there, still is there today. Then you had groups like I believe Matchstick was around, and a few other firms, and the local firms were around. I think there were a few others that were kind of locally focused. Since then, I'd say another 3, 4, 5 firms have really popped up that are kind of owning the local scene. But ever since we got here, really, our whole focus has been investing globally. Right? 70% of our portfolio is in North America, 20% is in Europe, and 10% is elsewhere in places like Vietnam, Singapore, South Africa, Israel, and elsewhere. And so us investing globally but being based here, on the early days, people were like, why are you not based in SF or LA or New York? And in the early days, we were like, well, why not here? And that was
where in the U.S. are your investments concentrated in? Where are the bigger pockets?
They're really not concentrated anywhere because gaming's so global. So we have, I'd say 5% of the portfolio is in LA, another 5% is in SF. And then you're looking at this distribution elsewhere. So we don't.
And those are the 5% would be the two highest.
I'd say maybe 5, maybe close to 10%. I have to do quick math and checking location. In the remote world that everyone went into, all of a sudden, a lot of teams actually left these cities and became, headquartered elsewhere or moved to a different state.
And largely virtual, probably different team members are in different spots.
Some of them are, some of them aren't.
Seattle's probably big too for gaming. Yeah,
There's definitely some there. I mean, we've got companies in Nashville, Georgia, upstate New York, Illinois,
bunch in Canada.
Yeah, we have a
Toronto,
bunch in
Montreal, Vancouver.
Yeah,
And scattered across Canada, it sounds like, too.
yeah.
is,
It's
yeah.
it's honestly all over the place.
Okay, so in your guys' case, there's not concentrations of talent
There's not.
and not a special concentration in the San Francisco Bay Area like a lot of software industries.
That's right.
You got to look all over for your deal funnel.
And look, we have over 50 portfolio companies across all of our funds. And one of the things that we've really benefited from, we feel, is being based in Denver allowed us to be outside of the SF bubble and the SF think tank, of which sometimes leads to higher valuations or maybe some trend chasing. Being based here, I think, has allowed us to benefit from some of those trends because we fly there and we fly to LA and we fly around the country. That said, it has allowed us to be in a really cool spot to think a little bit more clearly on, is this really worth 50 posts or 100 posts?
Yeah.
And oftentimes the answer is absolutely not. But groupthink is very powerful, right? In a good way and also sometimes in a negative way, especially in the investment world. And being based in Denver for us has really been a strategic advantage so far. And we think it further continues to be as we continue to build the firm here.
I just remember you didn't give me your not so good write up that you look back on and say,
Well, we definitely got this one wrong. We had a pretty intense take that Roblox would not be able to age up their audience. And what does that mean? Roblox, if you're not familiar, is used by about 3/4 of the kids in this country under the age of 16.
Yeah, I remember visiting them a while back at Zale. They were big customers of Zales. And I went in there and you in their headquarters, you see all these literally very, game concepts geared toward, 10-year-olds, 12-year-olds. I mean, very young audience.
Yeah, no, like it's definitely focused on like little kids. And we took the opinion that they were not going to be able to age up and keep that audience throughout like the college years, early 20s. And we were just dead wrong, to be honest with you on that. Like that was just a bad call.
How did they transition? Because I remember when they were going public, that was still an open question.
Yeah, they added some more complex graphics to allow you to play things that looked more like Call of Duty than like basic Roblox, Lego-y kind of stuff, which therefore allowed them to age up with the demographic as they were getting older. Because literally these kids grew up playing it at 8. And then because Roblox has been around so long, I think it was created in 2010, if I'm getting the number right. And these kids are now 18 or in college. And so how do you grow up with them? I think this is something, brands like Lego or Nike have been able to do over decades and decades and decades, but they had to figure it out for themselves. And we were pretty off on that. We thought they wouldn't be able to, and they did.
Well, it's a hard transition to make. I definitely could see where you would come from on that one.
Yeah, we've gotten others wrong. I think that we were probably a little too bearish for too long on augmented reality. That space has really taken off. We kind of pushed on that early as like, it's too early, but really we've made a few investments in it in the last few years and they seem to be doing pretty well. So
all right, I want to come back to augmented reality, but before we go there, how much money under management do you guys have? I know you're in the process of thinking about a new fund. Where are you at with that?
Yeah, so we've got just under $260 million under management. And we've been very fortunate and feel very blessed to have some great people behind us who've given us capital and taken a risk on us in Fund 1, Fund 2, and Fund 3. And thankfully we're not capital raising today because that's a lot of work to raise money. But yes, Josh and I have very high aspirations for where we're going to take this firm.
How high?
I'll tell you that, Josh and I were just chatting over here to make sure our answer was the same, so that we're consistent with you. But we think that Foundry set a really dangerous benchmark for us. And, I think for what they did well is they set the stage for what does a global investment firm look like here in Colorado. And I'll tell you that Josh and I are dead set on creating something that matches those expectations. And it's only going to be driven by performance. There's two types of firms in the world. There's performance-driven funds. There's AUM-driven funds. We are a performance-driven fund.
Good.
And that's what we want to stay to. And so Josh and I will grow, I think, our AUM up to the point that we no longer think we're good at managing maybe that capital stack. And we want to do it here. We signed a 10-year lease in Cherry Creek. We're based here and we're going nowhere. Our parents have moved here. My in-laws live in Colorado. Josh's in-laws moved here.
Oh, wow.
We have planted the flag hardcore here and determined that this is the state for us to do it.
And why Cherry Creek? it's Cherry Creek, right?
Yes.
Cherry-
it is
Why
Cher-
Cherry Creek? What's the environment like in Cherry Creek?
Yeah.
Tell us about the investor landscape in Cherry Creek. What is about Cherry Creek that is special for you guys?
Cherry Creek feels like not only is it one of the top 10 real estate markets, as our real estate friends tell us.
It's
so-
booming. Yeah,
yeah.
I mean, it's booming now.
But
Also, it's booming
Yeah,
in
we
the
should just
past, but the last few years have been
We just
whole
regurgitate all the
different boat.
facts that our friends have told
yeah,
us.
our real estate friends
Yeah.
give us a lot of
to make us feel
smart-
better about our high
Yeah.
per square foot costs. You
Yeah,
know, it's
we
good.
signed a 10-year lease and they were reiterating that was a good decision. So we're just going to rely on that. But look, the investment concentration there is just off the charts. You've got real estate firms, you have healthcare firms, oil and gas companies, publicly traded, privately owned, family offices, and then, of course, now venture capital firms that are based there, not just us. And Cherry Creek has just been awesome. There's serendipity of walking around and just running into people that leads to business value and business creation. Everything that people talk about, like, oh, the inertia of other parts of the country, we're experiencing that on a day-to-day basis. I'd say we've been in Cherry Creek for a little over 2 years now, and we just committed for another 10 in Cherry Creek. So we're in, and I would say even in 2 years, we have noticeably seen, I'd say every 2 to 4 weeks, there's just a net new person that's moving there, living within 5 blocks, and the inertia is just incredible. So,
and is in the financial services arena, I suspect, too.
yes,
Right.
exactly. So whether you're in investment banking, private equity, family office, venture capital, it's all net gains to the whole community that is like, wait, I can walk 2 blocks and meet the head of one of the largest family offices in the country. That's incredible, right? So I think we're incredibly happy with the decision to be in Cherry Creek, and I think our team loves it and we love it. And we're 5 days in the office, so we prioritize that.
Congratulations on that. I think,
Yeah.
although I don't go to office much anymore, but I think a lot of young people are going to lose out on
Yeah.
getting their careers off to a good start because they put too much value in not going into office. And I think those who are going to be in environments where they are going into office, interacting with their colleagues, their career development is going to be at a whole different slope. And you're not going to be able to make up for that lost time. If you're between the ages 25 and 35, you're going to fall behind and maybe permanently behind, perhaps for that reason alone. It's different if you're in certain professions. If if you're actually a developer of computer games and you want to go do that in your basement, that's probably different. But for most people who value their career, value their professional life, there's nothing like showing up to work, interacting with others, building kind of a culture, building an environment. I think when people look back on this era, that's going to be talked about. I don't think we ever should go back to the strictness of kind of the 5-day work week that existed when, during my career, the good part of my career. I think, in hindsight, that looks pretty silly as well.
Mhm.
But I think there needs to be the right balance, but the right balance is more toward interacting with people live in the office and in work environments, as opposed to, being isolated.
Yeah, I think we couldn't agree with you more that, if you think about, we want to create an environment where people flourish, people are trained. Josh and I both worked in rather intense environments in New York. We benefited a lot from those who had gone before us, staying with us, mentoring us, whipping us into shape, calling us out when we're doing something stupid, telling us that we could do better. And we think a lot about what evokes people to flourish in their professional environment. And, Josh said something really great the other day. He said, Colorado's historically been a place people move because it's a nice place to live. Well, we also think it's a good place for people to work.
Yeah, and I
And-
think that's a good thing to point out. In fact, from an LP standpoint, from a investor and fund standpoint, they're going to like hearing that you guys, have a 5-day in the work policy. I mean, how many venture capital firms with big brands have their people moving all over the place and are on sabbaticals all the time, and and have this kind of arrogance that, hey, the right companies, they'll find us and then they'll come to us. We'll be able to cover it via Zoom. And yeah, maybe for a while if you're living off your old brand, but for the hustlers who are building something new, it's going to take more than just waiting around for things to come to you.
And I think, Dan, that's exactly how we see it, is that we don't know what it's like to manage a huge brand, right? A $20 billion asset firm, and what that means to have multiple offices and to have, team and exposure to like every market, right? So we don't know what that's like. What we do know is that if you study the best investment firms in the world across any asset class, the ones we've studied are built in person, at least at the start. And once they get a global brand, then they can start thinking about expansion, right?
Yep.
And that's just not where we're at, right? And so we're in kind of that building mode, right? We're building a culture, we're building a strategy, and we think it's working, and we're very excited about it. But we think that's the being in person part gives us a speed and an edge around decision processes and saying no faster to the wrong deals and saying yes quicker to the best deals.
Yep.
And that's just, slower. I don't know what quantity slower, but slower on Zoom, right? It really is. And when you get, like our team that we're very proud of, like they are killers and they are strategic and they are fantastic. And them in a room is going to be noticeably, and we see it noticeably better than them remote. And that's how we want to build a firm. That's why we signed a 10-year lease versus, a bunch of remote, office shared kind of passes, is that we want to invest in that. So
Great.
Yeah.
So let's talk about some of your favorite portfolio companies. Which ones are most interesting? And I know you
we have
like,
no
you love
favorites,
all
Dan.
your,
We have
you
no
love all your
favorites, Dan. We
babies
have a lot of
and-
interesting companies,
Yeah,
though.
all your children are great, but
exactly.
what's top of mind? Let's put it that way.
Let's see. A few companies that we're really excited about from oldest to newest are companies like GameFam on top of Roblox, publisher in the Roblox ecosystem, or Dorian in the UGC
Well, tell
space.
us, most of the people who are going to be
Yeah.
watching this won't know your industry like you guys know
Yeah.
your industry. So slow down a little bit and tell us what each of those means, and
Happy to.
maybe tie them to your theme of kind of the
Yeah, Josh, less acronyms,
Infrastructure.
Josh.
Less acronyms. All right. So video gaming can be broken out into 3 ways of investing. One is you can invest in the esports teams. We covered that. That's a very bad idea. Don't do
Yep.
that.
Just don't do it.
Second is you can invest into content. This is what most people think of when they hear that we're video game investors. They're like, "Oh my goodness, I love Halo. What's the next Halo?" Right? We get this question a lot. That's not what we do either, because we believe that those are not a fit for venture capital return risk return profiles. They're very capital intensive, low exit multiples. We'd rather be somewhere else. The third,
unless you're our friend Julian here in Boulder.
he is the anomaly, and Julian is fantastic. And what he can do in creating content in games is amazing, right? And I'm excited for
It
that.
makes it look so easy too.
It does, and it is not. It is
Yeah,
not.
you just go away for a couple months, and you build a game, and then everyone plays it. There
Yeah.
you go. Yeah.
And then it's top the app store, and you're good to go.
Yeah, you're good to go.
And so that's for sure the anomaly, with tens of thousands of new games coming out every year. We don't claim to know how to pick it. I think Julian does. We don't. And so we kind of steer clear. I think most investors steer clear of something they know that they might not have a full grasp on, right? I think that's a quick way to lose money. And
It's kind of like producing a movie. You're not in the
kind of, yeah.
hey, we're going to find a movie that we think is going to be big and spend the money to invest in a movie or TV show.
Yeah.
You're below that. You're more of an infrastructure layer.
100%. And so our thought is that third category is really tech, platform, and infra of gaming. And those are companies like that people have heard of Unity, AppLovin, Roblox, Discord, Twitch. These are companies that succeed regardless of what title is most popular that week or month. They're going to continue to build B2B or B2C businesses that thrive. So our portfolio across all funds can be basically broken out as 50% B2B and then 50% B2C. So we've got a bunch of businesses that no one's ever going to hear of on the consumer side. And then we've got a bunch that hopefully they will at some point. And so that's
Once they wouldn't heard of on the B2B side.
What did you say?
The B2B is what most wouldn't have heard of.
Yes. The
You said
B2B
B2C.
is where I think there are incredible returns, sticky revenue, great SaaS multiples. And our whole strategy is that those will exit at a higher multiple. They'll take less capital than content to get there, and the returns will be better, right?
Mm-hmm.
They're also going to be competing against, maybe you know this from Zayo, is like 5 to 15 core competitors that are really going head to head, maybe fewer, maybe a little bit more. But in games are going up against tens of thousands of competitors a year. We like to say that creating a game is probably the most competitive thing you can do on the planet, any industry, because there's nowhere in the world where you have tens of thousands of new entrants a year. That just doesn't exist anywhere. You look at any industry or subvertical. So That's why we have this strategy. We're really excited about it. And so some of these, investments that we could talk about they're either B2B of gaming that we hope, get acquired or go public, or they're B2C of gaming. And likewise, we hope to get acquired or go public. So that's kind of been our strategy today.
Okay, so the one you started to talk about was
Yeah. So one of them is called GameFam. So this is a group on top of Roblox that is building a portfolio of games, and then they have live ops infrastructure, and then they partner with brands and external agencies to bring ad dollars into Roblox. Because there's hundreds of millions of kids on Roblox, brands like McDonald's or Budweiser or Sonic are like, how do we get in front of these kids? Like, they're playing Roblox, they're not in front of a television like they were 25 years ago. And so reaching them is really tough, and GameFam helps with that on a variety of levels. So yeah,
gotcha.
that's one.
So they were kind of aggregating not just advertising dollars, but the platform in which to bring the advertising to the gamers.
Yeah, so they have this whole portfolio of games that they then advertise through. And so we have this diversified approach plus an ad agency, ad dollar model on top.
Gotcha.
And so that's kind of this agnostic infrastructure to content layer that we're kind of seeing on that front.
Gotcha.
So,
You familiar with the local company Sovereign?
I'm not.
Sovereign?
No.
There's some similar to that, except not for gaming, for other platforms where they
Cool.
serve that same function as being kind of the not just aggregator of the advertising content, but more how to
Nice.
place that content in the platforms where people can see it. So
Cool.
but as far as I know, they haven't done that in the gaming world.
Nice.
Yeah, I mean, for me, I'll just go with, again, we don't have favorites, but recency bias. I was talking to him on the way over here in the car, but there's a company called Battle Road that's in our portfolio. Essentially what they did is they took a game engine and they've repurposed it for the DoD, and it's a military simulation software. And so essentially today, if you want to run simulations for war planning, it's pretty archaic stuff that they use. They took a game engine and they said, well, this can actually be repurposed in a lot of different ways to do this a lot more efficiently, a lot more at scale, a lot more realistically. And they've done it quite well. And so that's one that I'm very passionate about. I lead for us. Josh and I are very aligned.
Who's the customer of that one? Is it
that would be, SOCOM or Special Forces. You think of, the Air Force. You think of,
because they want their
so essentially,
armed forces kind of learning.
Yeah, the way war planning works is essentially there is, theoretically should be a off-the-shelf playbook for any single thing that happens in this country. So if Russia decides to invade Alaska, we know exactly which pieces we're moving and exactly where we're moving them. If China invades Taiwan, we know exactly what we're doing. If Mexico decided to invade Texas, we know exactly what we're doing.
So a lot of it is the logistics of how to react to.
Exactly. Yes.
Interesting. So let's talk about the word gamification. Gamification is a great word, by the way.
Yeah.
It's been around for a while. How is it still a big word that people focus on?
Yes.
And what is gamification? How does it manifest itself in what you guys do?
I feel like, gamification has a pretty poor definition, I think. The way most people use it is, how do you take elements of a game, which is typically making things a little bit more fun or sticky, and deploy it into some sort of part of the enterprise? Like, case in point, war planning. How do you make war planning, one, run better, more engaging? How do you make the process flow work a little bit better? That's typically what most people think of when they think of gamification of something. We've definitely done a lot of things in gamification for education. I'll let Josh talk about maybe Legends of Learning or POC, which are great. We love trying to find the intersection of where games and the enterprise or a specific subsector like defense, like healthcare, like education meet together. There's a lot of investment opportunity there because we think fundamentally, Josh and I started this firm on the premise that wherever people spend their time, that's where innovation will be. It's a fact. And people spend more and more time in gaming, more so than other places. So therefore, they're going to push the enterprise forward. Slack is a perfect example of this, built in a video game. Twitch was built for video gaming, pushing enterprising forward, and kind of how you think about OTT platforms and streaming. For us, we think that is the next level to go to, is to focus on where are people spending their time? How does that collide with other spots like education? Why don't you tell them a little bit about Legends of Learning and POC?
Yeah, so we're seeing that gamification trend play out in a couple different ways. One, Jason mentioned the defense sector. That's super interesting. this talent creating this simulation stuff. Second is we're seeing this in healthcare. So video games as a way to help children's hospitals with retention, or helping the kid focus more on a game while they're getting treatment instead of the treatment, which is very scary or hurtful or painful. And so that's helping in the healthcare industry. But this other one that we're looking at is education, where
The one in the healthcare industry, what's the
they're wheeling in a cart in front of the kid while they're
Right.
getting any treatment. Right? It could be anything from something very severe to something very menial, right? And the kid is playing Roblox or
so the game
Rocket
that
League.
they're playing isn't
No, no,
tailored
no.
toward the situation.
Definitely not.
It's just
Definitely
giving
not.
them a game to play.
Just giving them gaming, which, according to a lot of,
Yeah.
HIPAA laws, is very tricky, right? Because a lot of gaming is online. And so these kids can chat with each other online. So that means you can't allow that, because they could be like, sharing information that they can't share outside of a hospital. And so they had to create a lot of closed gaming networks
Gotcha.
for hospitals so that the kids could play and still enjoy it, but not be just at risk for any type of exposure. So was an interesting problem to solve that gaming helps with. You're seeing consumer satisfaction go up. You're seeing surveys go up, and it's helping nurses and doctors do their job better, because they're like, the kid's more calm. They're not as anxious about the needle or the tube that's coming at them, right, to what they need. But
Yeah.
and these are anywhere from 4-year-olds up to 17-year-olds, right? These are kids, and so that's been an interesting area. And then education is another area, right? I think there's a lot of talk about how education could be better in our country and needs a lot of work in 100 different ways. We are not education experts, but we are, in the gaming space. And so what we've seen is a couple companies like Poc based out of Canada. For 2 to 4-year-olds, they have this no words sort of playable app that allows kids to sort of move around Legos in a digital format in different, towns or in different types of apps. And that's been incredibly successful. They just raised a Series A. So think developmental learning for 2 to 4-year-olds. Go one step up. We've seen a company of ours, Legends of Learning, that's in 5% of kids K through 8 in America use this platform today in the classroom. So a lot of kids are using it, over 1 million kids a month. And they're seeing that if kids are learning math or geography or anything in this gamified format, their test scores are actually going up. And that's been really interesting. So, a lot of people look at the type of investing that we do at Konvoy and that, our entire team is involved in, and they think Call of Duty, they think Fortnite. And that's correct. And that's true.
Yep.
But there's all these other things that are happening under the hood that we're exposed to on the tech platform infra side that we're pretty excited about. And it's been incredibly rewarding for Jason and I and the rest of our team to be involved in these businesses, to watch meaningful change outside of just pure entertainment, which is great. But there's more here. And in our portfolio, that's expressed across, 50
because the
plus.
amount of screen time for even very young kids
Yeah.
growing up right now is so high.
Yeah.
Yeah, mostly they're watching, and if they're playing a game, it's a pretty simple game.
Yeah.
But if you could get them, instead of just staring at a screen, watching whatever is coming at them, but instead
Absolutely.
Yeah.
learning through gamification, that would be gigantic.
So like
Even
on
starting
this,
before they get to school.
Mhm.
Dan, you're teeing up our investment thesis. So I'll tell you, for us, we want to grab as much passive entertainment, which you just described, or sitting in front of a screen, to move it to interactive entertainment. Because when you're watching passively, you're watching Netflix, which everyone here does. Everyone has a Netflix subscription. You're essentially brain dead while you're watching. Your brain activity is more active when you are actually on the couch sleeping than when you're watching TV. And we want to grab that back when you're.
Is that true?
Yeah, your brain activity is more active when you're sleeping than when you're watching TV.
Wow.
Because at least when you're sleeping, you're in charge of your dreams, right? So
Yep.
you're stimulating yourself to.
Well, I don't know if we're in charge of our dreams.
Yeah. That is a whole
they are,
other
I'm not doing
podcast.
a good
Whole other
job with
topic.
mine.
We should have a podcast around that. That would be fun. Who controls our dreams? But I'll tell you, that's something that, when I read that, I could never look away from it. Where it's just, why are we all in this comatose of Netflix, Hulu, whatever it is? And these aren't inherently bad platforms by any means. But when it comes down to where do I want to, I've got 2 kids. Where do I want them to spend their time? I'd much rather they play games than they watch TV, because there's a higher chance you're using your brain, your strategic
But think
thinking.
about what you just said there, because I don't know that the general population has crossed over to be in agreement with what you just said. I think the general population is afraid of their kids spending too much time playing games. They think of games as being worlds they get immersed in that may be playing games with their minds and who they are and what they're becoming, or stunting their social skills. Does the gaming world
Yeah.
is that true? First of
Yeah.
all, and how does the game world overcome that so that the mindset is, getting your kids immersed in games early and often will help them develop their skills, their education?
Yeah, Josh and I are not absolutists. We're not going to sit here and tell you your kid should play games as much as they can in every single hour of the day. 'Cause that's bad, right?
Robin Thurston from outside
Yeah.
might have a little bit of a problem with that.
Yes, exactly. So that's a terrible idea, right? But at the same time, we're realistic with the modern era of where people are going to seek entertainment. We would much rather you seek that time, if you're going to devote an hour to gaming, than to plopping on the couch watching TV, right?
Yep.
That's the first part. When it comes down to the stigma of games, one of the issues I think that was so brand new, most people when they think of gamers, they think of a 16-year-old kid in the basement playing by themselves with no interactions. That's the mental image.
And shooting guns.
And shooting guns. That's the image that everyone has. Half of gamers are women first and foremost. They're not.
Really?
Yeah, it's 50% are women.
Wow.
Depends on if it's mobile, PC, or console, but generally speaking, it's anywhere between 45 to 52% are women. So a lot of gamers are women. That's the first part that I always kind of point out. So this is a gender not specific industry. So that's one. Two, the types of games people play, it's not just shooters or sports.
What about
games.
ethnicity? Is there any ethnicity?
I don't know about that. I don't know about ethnicity. I mean, Josh and I, and something we didn't cover is Josh and I grew up outside the States for 16, 17 years of our lives, pre-18, and I'll tell you, that's how we got into gaming, was in Africa and Latin America and Asia, where we grew up, right? And for us, I don't think there's any sort of ethnicity barrier to who wants to have fun in a digital format. I think everyone wants to have fun for sure. But when it comes down to games today, they're inherently more social than most people give them credit for. Because when I go game and when I go with Josh to play a game, which we still play games together today, is we're talking to each other the entire time. Probably more so than we would if we were sitting on a couch watching a game.
So it's kind of like the Manning brothers when they're watching football.
It's kind of, Josh and I are as good at gaming as Eli and Peyton Manning are at football. That's a direct quote. No, absolutely not.
Did you just make that up?
Yeah, no, absolutely. I totally made
I wish
that.
that was even remotely true.
Yeah, I don't want Peyton to challenge us or something on this.
Well, he's just up the street from you guys.
Yeah. You'll come knock on the doors.
I'd hope that we could beat Eli and Peyton.
We could definitely beat him in Madden.
I think
this is an open challenge. If he watches this,
actually,
that'd be
hilarious.
awesome. I would train all week for that.
I literally, I would.
No, but I think when we think about gaming, it's for us, we're really passionate about it because it is a better place for you to spend your time. There are a lot of things to figure out, things that we're investing into to make it safer for kids. There's a lot of marketing tactics that people deploy on kids that aren't fair. We have an investment in KID, which is trying to help solve that issue. Right? There's a lot of things that go on online. So a lot of parents have their trepidations understood. And I have a lot of sympathy as a parent myself for that. But at the same time, I think you got to think strategically of what you're choosing to allow your kid to do constantly day in and day out. And you want to foster their creativity. You want to foster their, I'd say, strategic thinking. And games played a big part for us, I think, in how we think through business today. And we've loved it and enjoyed it.
I think one other thing I'd add to what Jason said is, if you think about anyone that was born in the 60s, 70s, grew up in a world where arcade gaming was a solo experience and people would crowd around it. And then into the 90s, it was a console thing, right? You had Nintendo 64, and then you had PlayStation come out right after that, and then Xbox a few years later. And that primarily was local, right? People would go to play at people's houses, but we wouldn't be able to play online.
No, not at all.
And then 10 years later, really around 2002 to 2005, is when the internet got fast enough that online gaming could actually work.
But even then, it wasn't
still
much
rough.
Online in that time frame. It was still, technically you could, but nothing sophisticated
Nothing
could work
crazy.
in an online world in those years.
And then it took another 5-7 years by the time online gaming was at a speed or a fidelity that people were like, this is cool, right?
So
We're gonna do
when
this.
would you say 2010 that or earlier?
I think that's about right, where it was really proliferated that online gaming was going to work. We were all going to do it, and we were going to be online chatting with friends and having a lot of fun. So if you think about 50 years of gaming, which is really the area of this industry is about 50 years old, approaching 60. We are only 15 years into gaming being social-ish, right? And so to your original point of have people cross that chasm of gaming is healthy, good, fun, is it okay? You're dealing with 45 years of baggage and 15 years of good or pretty good. And we're still kind of in the middle of that. This is
How much is because I have one. How much is the original Atari console? Are those considered valuable nowadays?
I think it's like a collector's item for sure. I don't think it goes for that much, but I think a special collector might pay a few grand for it. But I'm not as tapped into that.
I was gonna guess 5. That was my guess.
Yeah,
Gotcha.
I'd guess 2 to 4.
I should probably look at what games my dad actually saved it from when we were kids.
Oh, that's awesome.
And I just
you should hold on
took it
to
over the box. Yeah, I got it in a box somewhere downstairs.
Yeah, like all things, that retro memories and history of gaming is really special. And there was many a failed console or arcade behind the ones that did well, right? So once you have the ones that did well, it's pretty cool. So I think gaming is still dealing with some of this, call it a hangover of a reticence towards it. I think right now we're seeing that gaming is one of the most social things you can do thanks to the speed of the internet. And, we always talk about this, how everything in moderation is okay, right? And I think that applies to a lot of things in life, where anything in excess is probably not good for you. And that certainly applies to video gaming.
Yep.
But it also applies to a lot of other things too. And so if you're going to play video games, some people might be more introverted and want to play by themselves. That's totally fine. If you want to be more social, gaming's got that too. So I think, that some of the parental trends around like a reticence around screen time is a real thing. I've got a 9-month-old at home, and we're already starting talking about this of like trying to keep screens away. That doesn't mean that she'll never play video games or be open to video games, but it does mean that I'm certainly going to watch it, and whatever she does end up doing is going to be quality. And so this means that the bar for the video game industry is actually rising of like what we need to produce as an industry.
Oh, that's interesting. Yeah, I hadn't even thought about that. So let's talk about other technologies that are related to gaming. So maybe let's start with blockchain. How is blockchain related to
You got the
gaming
perfect guy
industry?
right here.
You're giving me that question?
Yeah.
Okay. Blockchain. How is blockchain related to gaming? I think there was a lot of hype in 2019, 2020, and 2021 around blockchain and gaming, and a lot of people went out for it, did the classic kind of, let's call it pump and dump of their crypto, made a quick buck, and a lot of projects also just never came to fruition. Like pretty much every other intersection with blockchain and X, what X is. What the promise of a lot of people were interested with blockchain and gaming initially was, players could theoretically own their own assets on chain, where I could have a skin, I could have a character that I could then transfer from one game to the next. I think that proved to not really be something that most gamers cared about. Just to be honest with you, I don't think that's something that's really come to fruition. I think where I still have some interest in the blockchain gaming space is there are some really interesting ways to reward your player base through blockchain that is really hard to do currently with fiat and other, I'd say, forms of value, where you can start making...
Define what fiat means in this context.
So like fiat would be like just USD, so dollars, right? And so when you start thinking about who's playing your game, how do you make them sort of like shareholders, reward them in the upside of the game, more so than just, you're a strict consumer, I'm buying the game.
So kind of like giving miles in a frequent flyer program.
Kind of, yeah. So think about that is easier to do with, I think, a crypto sense than it is off in a traditional sense. So that's where I've seen the most traction, I think, personally to date. We've had a couple.
That sounds like the most traction, but not a lot of traction.
Very few. There's only a couple of groups, and we are fortunate that we are on the board of the most successful one to date, where they've had over 1 million people go through on a daily basis and play their games, which is called Sky Mavis, the parent company of Axie Infinity. And that is, by any way you measure this company, the most successful in this space by a magnitude of 10. But largely speaking, if I'm commenting on the whole actual sub vertical, there hasn't been many other superstars that have kind of come through. We're waiting to see some do that. We have a couple other plays that are up and coming. We'll see if they're able to achieve what Sky Mavis is able to achieve. We are hopeful for that. But when I look at the whole industry, I think they got a lot of capital, a lot of most of the operators that pursued it were not qualified to pursue this, and a lot of them have kind of torched out. And I think that is sadly, I think the story of many sub verticals of crypto is people were dollar chasing versus innovation or value chasing.
And it sounds like you also don't, as you look forward in time, you don't see how blockchain is going to have significant impact on gaming, even as they figure out the pretenders go away. And
I think what will happen is there's, blockchain at the end of the day is a technology. And I think it was really weird when people were like, we're a blockchain game. It's like, no one says that we're a Unity game. You're an Unreal game, which are the engines that build these games. No one says like, you know what, I'm an AWS hosted game. Nobody says that. Everyone just says we're a game, right? And you use the tool set that you will to make the best experience for your players. That is where I think we're going. There is value from some of this technology, but it's not like the headline technology. That's not what should be kind of at the forefront. And what we kind of always say is players are going to go play the best games. If it's not, they're brutally honest with you. Like the gaming community is not.
I imagine in Discord,
yeah,
people are brutally honest.
Yeah, they're brutally honest. They do not hold their punches. And so for us, I think there's some amazing operators building in the blockchain gaming space, but those operators get it that they're not leading with we're a blockchain game. They're leading with we're building the best experiences for our players, and we're using these tools to do that. But guess what, consumer? You don't need to know any of that.
Yeah.
It doesn't really matter to you.
But the tool of blockchain and how it impacts the gaming experience.
The most value
really
I've seen is the reward space. That's the most value we've seen to date, I think, here. I don't know if you want to add anything to that.
Yeah, we went from seeing $4 to $5.5 billion a year invested into not just blockchain, that's a much bigger number, but blockchain gaming alone, right? So that was in 21 and 22. In 23, we saw about 1.7 billion invested into blockchain gaming. This year, we're on track to see a little bit less than that. So there's kind of this normalization as people have realized all the things that Jason just mentioned. Which
Still
is
a big number.
Big numbers, but globally, most of that's coming out of Asia. I think there's a higher propensity for some of the games out of Asia than there is out of America, to be frank. But again, this kind of goes to we're a global investment firm based here in Denver. We have to track kind of all this. Jason's heading over to Singapore later this week. I just got back from Korea on Saturday, and so we're going to these markets to learn as much as we can and to hopefully invest in great companies in these markets. But watching these trends across regions is certainly fascinating. But yeah.
Okay, so let's move on to virtual reality and then augmented reality. How's that impacting?
Well, we got an Apple Vision Pro for the team in the office. Big hit. Everyone.
Have you tried it?
It's a big hit. I've tried it only once.
Okay.
And it didn't sell you.
Well, I was.
We're not doing this in Apple.
I was actually in the UAE.
Yeah. Okay.
And I was experiencing. It was somewhat of I wouldn't call it a gaming platform, but a company who was one of Apple's partners out there and trying to figure out what to do with it.
Yeah.
So it was fairly early, maybe 9 months ago.
Yeah. Next podcast, we'll do it in VR together. It'll be a wild experience.
Remote or in person. I don't know.
Yeah, the technical team will love figuring that one out. That'll be a lot of fun. Do you want me to kick off with
you? Go for it.
VR. VR, generally speaking, you asked VR first, right?
Yeah.
Look, there's some amazing games. Like, I don't know if you've played like Beat Saber or things like that. Those are amazing games. VR's issue for me, which I've always kind of assaulted VR for, is the weight of the headset is oppressive in the sense that I don't want to wear it for more than 30 minutes. Yeah. And until the point that the consumer doesn't notice that the device is there, you're always going to be time locked, in my opinion. You're always going to have issues with, you're never going to hear of somebody being like, yeah, I was just playing for 6 hours and I lost total track of time. It's like, have you had this thing on your head for 6 hours? It's like my neck hurts after 30 minutes.
And what do you look like afterwards?
Yeah, it's like you'd be off of the rails. And so to me, that is when, and this is where kind of segues, I think, into what do we think is going to be kind of what really catches here? It's going to be augmented reality, where you're going to have a light device set on your face that augments your current situation in an interesting way. And the only way to do that is to remove the weight requirements, in our opinion. And we have a couple investments that actually circle around that. We have a new company called Exana in our portfolio that allows you to move the processing power at the headset level down to your phone. Through really interesting technology that actually, I don't know.
Is it a wireless connection from
so
there?
So it's trying to be a Bluetooth replacement, essentially, where most people don't know this, but everyone has an electrical grid that is proprietary to them that travels all over their body.
No, I did not know that.
So you have an electrical grid.
Did we.
I've got an electrical grid. And that is what is actually used to transfer the information down to your phone, which is where the processing power would be, which would allow it to be a lighter headset.
Okay.
And that is what we think is necessary to be like the adoption issue for
Wait,
VR.
So you'd be using, go through that again.
Yeah.
It's using what to
So
transfer?
it's literally using, so think of you got glasses here, right?
Yep.
So you got glasses on right now. Those glasses are now Exana enabled. They're using this thing called YR is what they've just dubbed it. And essentially it would, instead of using Bluetooth to transfer information to your phone, which is incredibly battery inefficient, also cannot do the processing power that we need. It would actually then transfer the information over the electrical grid of yourself down to your pocket, to your phone. And as long as you're touching it, and by the way, they're presenting at our summit here, which you're coming to.
Yes.
You can see it.
Make sure, what date is that? Make sure we got that blocked off.
We don't want to say it on YouTube. We don't want people.
We don't want people showing up on YouTube.
It's in your inbox.
But it's in your inbox. Thank you, Josh.
We'll make sure.
Yeah, but yes, we'll get to make sure you're there. But it's very neat where you can literally see, for instance, if I'm playing like something on my phone with music and I'm holding a speaker, it will play. If I drop the speaker, it'll stop playing. It's pretty cool. So anyway, we think that's where the future of VR is. That's what it has to be, and it's going to be this mashup of augmented reality. And I think
are you envisioning the glasses that are being worn? Are you seeing the world around you?
Yes, you should be.
And then you're seeing kind of
you're literally seeing things layered on top of the world around you that are picking up what our phones are picking up with QR codes that we're scanning constantly, whether it's a menu or something else. Think of that, but it's going to be more that computer vision side. That's a chair. I know what kind of chair it is. If you want to know how to buy it, I'm gonna search for it online and I'm gonna find it up. And with one word, you could buy it in a second. That's where we're going. We're not there yet, but technologies like this one that Jason just described is how we get there. But this kind of comes back to AR, VR. When, how, what? It's definitely going to be AR first. VR is definitely down the road because people, I think, don't want to be fully immersed with a heavy headset on for very long. And so, as Jason,
that's interesting. I would have thought the reverse order, but you're saying augmented first because people want to still stay in.
They want to stay
world.
Present. They
want to stay. They don't want to disappear into a whole nother world.
With our phones, we love taking photos of things. We love learning more about something by zooming on something. And we love QR codes to learn more about whatever the heck it is, right? Whether it's a map or
and you could swear on this.
This
pod.
Even though I do hate this movement towards digital menus. When I go to a restaurant, I would love for people just to hand me a piece of paper that says what it is.
Same.
Like, when we go to a restaurant, I want phones away if we can. This has been one of the worst things I think about this QR code movement.
Not about it.
Yeah, this COVID thing. This is something from COVID that needs to die away. It needs to go back. Yeah. It needs to go back into the. I totally derailed you in your thought process.
No.
my hate of digital menus.
Okay, well, where I'm going next with the technology trend. The topic of the day, the boom cycle of the day.
Yeah, artificial intelligence.
How does AI? It's got to be huge. I know.
Yeah.
In many different ways, I've already been impacting it.
Yeah, I think in video gaming specifically, we believe most AI technology is completely overhyped, and that most of it is leading to a cost efficiency at the studio level, but not necessarily a ton of incredible investment opportunities at the investor level. what I mean by that is a lot of this AI tech is creating, auto-generated worlds or images or artwork or 3D assets, and this stuff is incredible, and it's going to keep getting better, literally almost by the month right
Yeah,
now.
because the manual nature of how
Yes.
gaming is done
Yes.
was shocking to me. I went to Julian's, Julian Ferrier, who has Sunblink,
Yeah.
who's a gaming studio. This is his second one. And his big game is, I'm doing a name blank on the
It's the Hello Kitty.
Hello
game,
Kitty.
Hello
right?
Kitty. And,
Yep.
he's just been killing it. App Arcade Game of the Year.
Big plug.
Yeah.
Go play it now.
Yeah, for certain. I'm not sure this audience is a Hello Kitty audience.
We'll
But anyways,
convert
with
him.
this
We'll
game-
convert him. It'll be great.
You never
Yeah.
know until you play it.
Yeah. So with the gaming studio, and so much of the art is first sketched out by hand.
Yeah.
So it starts with the sketching process, and a lot of ideas that way, moving slowly into someone having to physically then create it virtually with some tools, but there's a lot of hours involved in creating the characters and creating the movements.
Yeah.
But with AI, that is just advancing in dramatically.
And it's advancing incredibly quickly. And so what's happening is this technology is getting better and better to help that artist, that 3D artist, that engineer a ton. And in that pursuit, a ton of companies are chasing it. But what's going to happen is there's going to be this race to the bottom on price, right? And so essentially it's a race to zero. This gets commoditized, and the winner certainly isn't going to be the investor that invested in a company that did a price raise to the bottom. It'll be for Sunblink, for Julian's studio, and for every 3D content artist out there who says, oh my gosh, this is incredible. I was paying $100 a month last month. Now I'm paying $15 a month. Now it's free. Wait a minute. This is awesome, right? And so their lives get exponentially better, faster, stronger.
And the leverage that an artist has now, as long as they're comfortable with using the latest technology, they could do so much more with their time.
Absolutely. And I think that a lot of people think, oh, well, this means we're going to lose 60% of the artist jobs. Absolutely not. It lets you actually hire more artists because you can do 8x more, right?
Yeah, the virtual worlds that get created, the virtual characters that get created are going to grow.
Yes.
You know,
and you're going to see
geometrically
bigger worlds. You're going to see better worlds. You're going to see
more detail,
and
more
then
complexity.
The speed of getting all that complexity to market is just going to ramp up. So we just invested in a company that is getting a game to market in 9 months. Usually the games take 2-3 years to get to market. And this tech allows you to maybe build bigger and better games and get to market in 6 months and iterate faster versus saying we're going to build for 4 years and we're not sure if someone will like it or not. That's the old way. We're in a new world now, and the gamer and the studio are the beneficiaries of this amazing technology. So coming back to our side as an investor, which is a different perspective, is we are very hesitant. We're very cognizant of there are a lot of ways to lose money quickly in a hype cycle. We're absolutely in one. There's so much to be excited about, but we just made our first AI investment into gaming. Yeah, you could argue 18 months into the cycle. So were we late? Were we early? We feel pretty appropriately timed, but that's our first one, right? So
yeah, and you got to think we talk about the complexity of the virtual worlds that get created and the characters, but what the characters can do and what you can do in those virtual worlds probably are also enhanced significantly by AI. I would think.
Yeah, maybe the AI NPC space is kind of interesting.
Yeah, it is. I think just if I was going to circle back on one thing, so my last job before this is I worked in the research division for IBM as a software engineer, focused on artificial intelligence, on machine learning, natural language processing, computer vision. And I think a lot of people would benefit from understanding the history of the cycles around artificial intelligence over years. And I think that the thing that was new about this one is this was the first time that the masses got to touch a lot of stuff that is happening. And there are some new things happening, but I think that we are going to be dramatically disappointed in a couple of years when we see all this R&D dollars go in, and the products at the end of it, I think, are going to be relatively lackluster. And also, most of the stuff is going to trickle back up to the top. You know, the people that are going to benefit from this revolution is Microsoft, IBM, Meta, Alphabet, so Google. It's all the big research houses. It's not going to likely be like an upstart, and And I think that's something that, people often point to, like OpenAI. OpenAI was a $1 billion startup. That's not a startup. That's $1 billion. That's not a startup. And that's owned by Microsoft, right? And so, when I look at the landscape, I think it's really interesting. All these investors are trying to put their money into every single thing that they possibly can at ridiculous valuations. We have steered away from it largely because so many people have come to us pitching that they've figured out how to do the AI for X in gaming. And I'm like, actually, you guys don't know anything about AI. You're just trying to apply a technology that's going to actually monetize back up for Microsoft.
They don't know anything about gaming. Maybe they know something about AI, but
or the other way.
Kind of like your earlier example of blockchain. They sort of knew a little bit about blockchain and tried to apply it to gaming, which they know nothing about, and think they got something new.
That's.
But I'm going to challenge you guys on that, and time will tell who's right or wrong. Well, I should say you guys, you're brothers, but you probably don't always think alike. So I don't know if
you're looking at a bear. You're definitely looking at a bear. Yeah, you're definitely looking at a bear.
I think you're definitely in agreement with you that the valuations are out of control, and there's going to be a lot of disappointed investors, including unsophisticated investors. That I agree with. What I don't agree with is that the only constituents who are going to gain are the big tech companies. I think they will gain, but I think you're going to see a lot of clever startups that scale. Some scale very quickly, and some become permanent brands for the next 30 years. Exactly what they're doing and who they are, I don't think any of us can put our finger on it yet. But to think that this, and I see this as a breakthrough. I mean, I even remember going to AI conferences early in my career. And by the way, that was in the late 1980s, and you hear people talk about AI, and it kind of was there forever, but never really happened until recently. But something is very different about what is happening right now. These large language models and what they're doing, and then how you apply that is going to be transformational when married up with other clever applications, clever business plans, and it's going to produce real change. It just will.
I hope you're.
It'd be like sitting there before Uber and not being able to say all this cute stuff people do on their phones is never going to mean anything. And next thing you know, Uber exists. Like, okay, I didn't really see that coming. So
I hope you're right. I hope that we see a couple startups come through the ashes of this, and I think.
Well, you're already calling it ashes. That's even hit the full boom cycle yet. You're already digging the grave. Wow.
I think 2025 there's going to be a lot of gravestones set for a lot of these companies, and it's because a lot of.
Do you think it'd be gravestones, or just you think it'd be a valuation check that?
I think it should be great. I think it will be gravestones. I think there will be a lot of zombie companies too that go into this. Like they've got $500 million on the balance sheet, and we're like, what the heck are we doing here? Like, and there's going to be pivot.
So the early but even in the early .com era, which that definitely was the case. I mean, there was a period of time that went by where the hype was strong, and there was a lot of dead bodies in that too. But there were also companies that we take for granted today that were born as a result of being the 5% that succeeded and the 1% that thrived. Those other companies that dominate the world today. And by the way, last time I checked, IBM's not one of them.
Yeah, that's true. I would say like, I think to push back on this thought for like with startups that kind of emerge from the ashes here, like I think that
from the ashes.
Yeah, from the ashes. I'm going to fit the word for the ashes.
I'm not sure I'm saying the startups are going to emerge from the ashes.
Yeah.
I'm going to say yes, there'll be ashes, but there's also going to be companies that do really well during this period and create something real, durable, sustainable that will be, in hindsight, you'll look back and say, "Wow, I didn't see that coming."
Yeah, I think there's definitely a good chance. I think where I take more optimism is I'm going to look towards the companies like a Roblox, right? That is going to use a lot of these tools and technologies to, as Josh said, push the content faster. I think that's where I'm going to, personally, I'm excited to see a step change for the next 5 years.
So you think Innovator's Dilemma is dead?
I don't know if it's
we've progressed past Innovator's
I don't
Dilemma?
know if it's dead. I think what I'm not optimistic with is these companies that are going and raising $500 million, $1 billion to go build models in their standstill alone, where they don't have the organizational throughput of Amazon, a Meta, a Google, or an IBM, where they can go channel those technologies to actually go build something of value. That is what I don't have optimism around. And I look at those as billion-dollar funded research projects with commercialization. Let's figure that out later. I think that's where I take issue mostly with what I'm seeing with the fundraising cycles. And that's what I push on the most.
Yeah, I think one thing that is different today,
Yeah.
and this is in agreement with what you're saying, that didn't exist before, is these big tech companies who have such deep pockets and are willing to spend so much money without I want to be careful how I say these words, without the pressure. I was going to use the word discipline, without the pressure to be able to explain, here's what's going to come out of how we're spending the money.
Mhm.
So they are sucking a lot of the
Yeah.
innovation that otherwise would have been funded by venture capitalists and
Yes.
the people who left those companies to try something new. They're like, we'll just employ a bunch of really smart people, pay them a whole bunch of money, tell them to go do things,
Mhm.
and hopefully good stuff comes out of that enhances our franchise, our platform. But if not, people are still going to use our search engine, and we got a lot of more cash where that came from, or shop in our online stores or whatever.
It is interesting that a lot of those big, highly funded research projects, which sort of mimics the OpenAI trend, right? That they raised so much capital years ago with really no quite clear vision of how it's all going to play out. And then it worked, right? So I think a lot of people are chasing that same story, saying we can do it in education or healthcare or deep tech or whatever they're kind of chasing. And I think you make a great point on the corporate balance sheet side. What we haven't seen, just from our perspective, is in gaming, we haven't seen a $500 million to $1 billion funded research project around gaming, which is interesting given 3.3 billion people play video games, that one has not gotten tackled yet. Yes, I think going after healthcare and a few others first makes a lot of sense, but we haven't seen it in gaming yet, which is interesting. The biggest funding we've seen around AI is around AI NPCs, which stands for non-playable characters. So the characters that are computer generated or computer run in these worlds are going to get more sophisticated. It's already happened, right? The robotic responses you used to get are a little more fluid today, but they still feel like robots. What happens when they know who you are and they're responding to you in the way that
That's a good point.
ChatGPT is?
Yeah.
Where they're like, that's a good point. But I was actually thinking of these three counterpoints. If you experience that in Grand Theft Auto or Call of Duty, that would blow your mind. Right?
Yeah.
And
so it's not just a passive, generic character, extra fill in the scene.
Yeah.
It's someone who's starting to interact with you like it's a live person who knows who you are and knows how to interact with you. Ooh, that would be pretty crazy.
Yeah, it's pretty neat.
That I think is where we're going here in the next 3 to 4 years, how AI is playing itself in gaming. And that is going to create gameplays, worlds, even new genres could be created off of this, where, that would be wild.
I want to rewind just a little bit and go back to, because I think this is a really interesting conversation. Even Josh, as you made your comment, you start talking about, we don't see any of these gigantically funded startups around AI in the gaming world. Almost, in the conversations that we're just having, almost implying that the breakthroughs in AI, and maybe by extension, the breakthroughs in technology, are going to less come from thinly funded startups like in the past who are clever, create something, maybe they're individuals who spun off from another company, took knowledge and expertise with them, twisted things around a little bit and started something that, then gains momentum, and then they raise capital, then they raise more capital. But instead it's going to come from, pre-funded by lots of money kind of experiences. Is that what you guys are saying?
I fundamentally agree with that. And I think this kind of ties into like what I was.
Well, why though?
I think so. When you think about like where I think the applications of these technologies there will be multi-billion-dollar companies built around applying the source of that information and that technology outward. And what I mean by that is like if you're going to build some company around art generation for the video games industry, there could be something there that's worth $1 billion plus, right? There is something there that could be built, but they don't own the source of those models. Those models, which I kind of would, if I'm think back to like the .com era of like the internet, the major tech players own the internet in this analogy, right? They own the source, the true value, the creation of these AI models. I'm not bullish on the startups owning those. I do think there will be startups that are able to build on those models that do produce a step change, but I don't think that's going to happen in the next year or two. I think that's like more like a 5 to 10 year play. That's my position. But
Do you mean with AI specifically? You mean tech innovation in general? Is that what
Well,
you're
we
getting at?
started out by talking AI,
About AI, but
but AI is really
it's pretty
AI
broad.
is two letters that mean everything right now because pretty much everything software related, arguably fits within the AI
Yeah.
bucket right now. Could you imagine trying to go start a company we're going to work on software, but it's not AI? Like what?
Why not? Yeah. I'd say I think that the largest R&D developments will likely come from these hugely funded AI projects that can attract and pay for the best talent. I think that's largely where a lot will come from. That's what I kind of, the optimist in me hopes that that's not where all of our innovation comes from. And the argument in my mind of why I hope it plays out differently is that hustle, grit, and a lack of runway leads to a sense of urgency and acute thinking
Yes.
that the best founders have. And I think we've seen this for decades. And when your back's against the wall, you do things differently than when you have $1 billion in the cash in the bank and you're making, as an R&D person, 6-7 figures, right? I mean, I think that lack of urgency could lead to a slowness that urgency could bring faster.
Yeah. And, this isn't the first time in the recent era where there was a string of startups, dozens and dozens of startups, all of which started by raising hundreds of millions or billions of dollars worth of cash. I lived through that era. You talked about the .com, but the whole telecom internet infrastructure, was proliferated with companies that were popping up almost by the week with big names at the helm, $1 billion of capital, and maybe a business plan that was half written. And the stories ended badly for all of them. If someone would have said back then, this is the end of venture capital, this is the end of kind of startups getting funded who out innovate companies who have deep pockets, they couldn't have been more wrong. And I'm still a believer in that. I think what you're going to see is I'm a little softer in this because I do think the big tech companies aren't quite ready to be trampled by the innovator's dilemma. I think they're still, innovative and they're able to do things with deeper pockets that the life they have in front of them, is fairly long duration. But I do think there's going to be plenty of room for people to innovate. And with all the forces around AI, you're going to see that happen from the ground up in many cases.
Do you think this time is different because the big corporates at the helm of those big funding decisions are more innovative and tech forward than the last generation of technology behemoths?
I don't know, because we were talking earlier about how the traditional venture capital industry, are they as good now as they were before? I don't know. A lot of them are living lifestyle jobs now. They're not, hustling. They're not grit. They're not show up in the office 5 days a week. Are they at the tail end? The big brands, are they at the tail end of their existence and living off their past brands? So are the venture capitalists, which I think you're asking, the capital formation, is that where innovation is? Or is it an example like you guys? Is it, outside of Silicon Valley, you chose gamification, you chose to do it out of Colorado, and you're focused on it, starting with what they would consider a pittance of money. Oh, what's $50 million? What was your first fund?
11.
$11 million. What was your second fund?
65.
65. Oh, big deal. 65 million. We're Silicon Valley. We play around with real dollars. Well, you guys, care about every investment you make, the details of it, the success. You're trying to build a big brand. You're the innovator's dilemma, to them. You're the ones who are creating a brand. And, is there room for that still? Hell yeah. I don't see that ending anytime in my lifetime.
I like your narrative. I like this. Yeah, no, I mean, we definitely align. And I think Josh and I spent a lot of time thinking through, like, what do we want to keep from the last 20 years of venture capital and what do we want to totally dispense with? And, one of the things that we've really leaned into is we think most venture capitalists do not have a stomach for cleaning up a tough situation. So when Josh and I see a complex situation, we look at alpha. That's what we look at. And we think there's a great opportunity there. and we want to learn from more of our private equity cousins than we do from our, this is a perfectly, formed seed round to 4 at 20 post, right? It's clean, no debt. It's like, doesn't mean that's a better asset than us looking at this messy situation over here.
Mm-hmm.
And Josh and I have really leaned into that, especially over, I think, the last 3-4 years. And we found a lot of benefit from it, where be creative, explore and study financial engineering. And so when Josh was talking about firms that we glean our insights from, get our inspiration from, we look at things like Renaissance Technologies, right? Like, how do they think about reapproaching investing? And so we think of ourselves as an investment firm first. There's been investment firms since the dawn of time.
Really?
Yeah. Let's keep going, right? Like, and let's keep innovating on what it means to be investing in the private markets.
We also took this approach where we looked at, we read all the letters from Warren Buffett from the 70s all the way through the early 2000s as a team.
I collect his annual reports. I was
really?
over there to see if I had them.
Well, we've read.
I think I have in my office, and I cherish them. I got to start collecting them again, because I was piling them up, and then I stopped doing it about 10 years ago, and I want to get my hands on a lot of them.
Yeah. The way that he explains why they invested in something is just, it's so clear, it's so concise, and it has more zeros than I could ever fathom managing in my life, right?
Yeah.
And I think that is the way we read those letters, was like, it was so inspiring, the way he was communicating with investors and talking about how he met these operators, and he'd rather overpay for a great asset than underpay for a poor one, and all these things. And so we took that into the way that we do a lot of our reporting and letters to our LP base, and also the way we think about investing, right? So Renaissance Capital, you could also look at things like Lux Capital with their deep tech understanding of different sub verticals that other people are like, that's a lot to consume, and they did a great job. And so there's a lot of really inspiring firms that I think we want to glean a little bit and then add our own flavor in our own industry. But I think a lot of the future of venture capital is specialization. And specialization can be done either by stage. I think that's largely been done. I think we're down to, you either specialize by sector or by region, right? I think those are the two ways that you specialize now. And that's the way to own a market. And we've taken, obviously, the sector approach and the geo-agnostic. And I think that's a big part of the future of venture. To one of your questions earlier around platform, one of the reasons why we like to write every week is not only for the critiques and all the great ideas, but also, you can only do so many calls or meetings in a week. Content for us has been a way of scalably reaching thousands and thousands of people a week, right? Or a quarter. And that is an incredibly efficient use of time in a world where I think there's a lot of noise, but if you find the few things that you read on a weekly basis or monthly basis, you really enjoy them. And if you don't enjoy them, they get knocked out, and that's okay. But we like this dynamic of quality content, quality thought in a very noisy marketplace.
Yeah. My guess is, especially when you said that you rotate who writes each week, that the team that you're building, that habit of, we're going to write down, we're going to come up with theses, we're going to explain them.
Yeah.
We're going to write them. It builds a culture within your firm, and a coalescing around kind of the clarity of certain ideas. That's probably going to pay huge dividends for years to come.
It's also as much an internal exercise. Like, as you mentioned earlier, Jason and I don't always agree. We don't always agree internally as a team, but it provides this forum and this table for us to disagree and debate, like, is AR going to go up or down? Is Roblox going to age up or down? Is whatever topic, right? And oftentimes we agree, sometimes we don't, but it allows this incredible, vibrant debate that I think is at the crux of anything around innovation, anything around investing is debate, right? I mean, when you say no to an investment, you're disagreeing with their vision of the future, right? That's a statement in and of itself, right? And I think internally, it's made us so much sharper at not only communicating our own thoughts, but also building trust. I think that, over time as a firm, if you trust the way another person thinks, when Jason pounds the table on a deal, I'm listening for sure, right? Because I know the volume of deals that he's seen. And if he's excited about it, I'm going to take it very seriously. But if we had met yesterday, you wouldn't know how seriously to take it, right?
Yeah.
But over time, I think this is how the best teams, the best cultures, and best firms, I think, become, performance driven, excellent teams. So that's I think what resonates for us a lot.
Yeah, I think like largely too in venture, you said something that really stuck out to me, which is so true. Is there's so many lifestyle allocators of capital in venture, and Josh and I are so deadly focused that is not us. And so I think one of the things that in a down market, which we're in, compared to especially the ultimate bull market we just lived through, is one of the positives.
No, the ultimate bull market was 2000, 2001.
Yeah,
Okay.
Before you guys' time.
Yeah.
That was every bit and then some what we lived through more recently.
Well,
Wow.
that we haven't had the pleasure of living through
You
that
haven't
one
had
too.
the pain of what a real meltdown is either.
Yeah, which
This is nothing compared to the telecom and .com.
And I think for and for us, like, we look towards those. We have studied historicals where we weren't allocating capital professionally. We were alive, but we weren't living through it in the trenches with you on that. Is we look towards what is to come, and I think one of the benefits of when you go through a tougher time than we've lived through, previously, is there will be a culling, right? And I think we need to re-professionalize private investing. I think we need to really reflect on who is managing money. And, at the end of the day, if you're not the best, you shouldn't be doing it.
Yes.
And, that stands for every single one of us. You've got to defend your right to be in the room. And so for Josh and I, we're dead set on being that room. We want to fight to be there. And, I'm excited personally, and Josh and I have talked a lot about this, is that the pool of capital allocators should probably shrink a little bit. We have a lot of hobbyists who are allocating money, and that kind of messes the dynamics up, where a lot of companies that get funded shouldn't be funded, and the prices go inflated high, and that creates dynamics that are issued for people down the road.
I would say what's messing things up is less that. There certainly is that.
Yeah.
And more the traditional venture capitalists that instead of raising their next round at 200 million or 300 million, they raised 3 billion and 4 billion, and the quicker they could allocate that capital, the more the 2% of the 2 plus 20 would kick in, and then they go raise an even bigger fund, and that got just out of control.
Mm-hmm.
In 2018, 2019, 2020, 2021, and that's what's messed up the market more than anything. That's where the big, gigantic, wheelbarrows full of cash would get invested by firms that had a great brand. They earned a great brand, but then they tried to, leap forward.
It sounds like
SoftBank footprints.
What you're highlighting is a lot of these firms that probably historically had performance-driven blood.
Yes.
Got lured into an AUM-driven blood.
Yes.
And those are just totally different games. Where if you're an AUM-driven blood firm,
and they'll never admit it. I mean, no one ever says, "Hey, this is all about AUM." I mean, who's ever going to raise their hand and say that? But you do 2% times 2 billion, split between a handful of people, and it's like, wow, I'm going to, and let it drag out for 10 years.
Mm-hmm.
That's a lot of money that comes in.
Yeah.
Even if the fund has a lackluster outcome.
And it's interesting on that point is that the assets, obviously, if you're an AUM driven firm, the assets you should be investing into likely do not merit the risk profile that most people in venture are allocating to.
Oh yeah.
Which is
it's
where
hard
I
to
think
put $100 million dollars at a time at risk.
The investment, the incentives are against each other, perversely informed, where, obviously if you're an AUM driven firm, you shouldn't be investing in such risk on assets, right?
Yes.
Like,
I think there's also something that is being challenged in venture. I think portfolio strategy is something we're talking about a lot.
Yeah.
That what got venture capital as an asset class here might not get it there. And what I mean is, last 25 years of venture capital portfolio theory was in a world of decreasing rates and increasingly free money and market multiple expansion, right? That's been the narrative for a long time. And a lot of people have been a beneficiary of that. One, the real estate market since the 1980s, and a lot of other asset classes. I think that a lot of people say, oh, you're going to invest in 20 companies. One is going to do incredible, return 80% plus of the fund. Two are going to be pretty good. They're going to return another alpha. And then you're going to have just a complete bunch of losers, right? And I think that's from a perspective of not as much competition, this expansionary market for 25 years plus. And I think that that's kind of coming into question now. Higher rate environment, higher risk on, a lot of culling of the herd on the startup and the investor side is happening. We're in the midst of that. We're probably halfway through that. I think we've got another, some of these zombie companies and allocators that are kind of coasting for a second and are inactive. needs to play out. I saw a stat from Carta that's something like 25 to 40%, I'm blanking on the number, of VCs haven't written more than one check in the last 18 months. That means you're looking at just a complete zombie VC market as well. So I think something we're starting to think about is if you pay the right valuation, you shouldn't have this huge swath of failures. And portfolio theory should shift. You should have 2 or 3 big winners because you got in at the right price. And then you should have 5 or 6 pretty good ones, not 1 and 2 and a bunch of losers. So I think portfolio theory should be under review at most firms. Certainly is something we consider.
Well, you can look at historical data, and the vintage of a fund is correlated to the return.
Mm-hmm.
And not surprisingly, it's when it's a really bad cycle.
Yeah.
New funds raised in bad cycles perform really well. Funds raised in real good cycles perform poorly.
And this
kind of follows, with a lag.
And I think that one of the things that we were really excited about is we looked at the median valuation through the last cycle when we had our first 2 funds, and our entry valuation was noticeably lower than the median, right? And so we tried to have price discipline while the market was going up. Now, you still need to be in great deals, and market moves. But right now we're investing out of our 3rd fund, which is $150 million. And that fund is at a really interesting time in the market. So we're, seeing great valuations, great founders, a lot of grit, right? A lot of ones that are like, this is really hard, but I'm here for it because I've wanted to do this my whole life. That founder is backable.
Yeah,
many times.
The same is true. The best founders come out of environments like we're in now. They don't come out of environments where everything seems easy to raise money, easy to get up rounds, easy to tell stories that people will nod their head in agreement on. It's when you have to, fight against the current environment, and you need to raise money the hard way, and you need to build a real business that people are paying attention, maybe not to the bottom line metrics, because I think the kind of businesses that venture invests in, it's really what it can become, not what it is. But the story and the metrics and the data to show that you really have something is under a lot more scrutiny.
And on that point, everyone knows that Airbnb and Uber were built, I believe, as 2008, right? So they were built in the middle of one of the hardest times.
Yep.
That same year is when League of Legends came out, which is one of the most popular gaming titles in the world. Halo came out in, I believe, 2001 on the wake of a huge crisis, right? Yep. And so not only do amazing tech companies, but I think some of the games that we love in our industry that survive today were built in these really hard times.
Zayo, 2007. We raised money in 2009 during the Great Recession. So similar things. So we talked about, maybe this would be a good wrap up. We talked about you guys as investors being here in Colorado, and Colorado historically has not been known as a geography for capital formation. Yet a lot is transpiring here where there's more and more examples like you guys of companies, investment firms that are either headquartered here, specialized in a certain vertical, where their geography is agnostic, or sometimes focused on geography that includes Colorado, but there's dozens and dozens that are here now that weren't here before, and including at the high end, Partners Group, which isn't so much a venture investor, but is bringing into town a whole lot of investment professionals.
Yep.
One thing we experienced in Colorado is when there weren't that many tech startups, one of the hurdles we had to overcome is that those who were thinking about moving here, be part of a tech startup, had to look around and say, well, if this doesn't work, what do I do next? Do I have to move somewhere else? Well, I think the same trend is going to play out on the investment professional side. I'm going to come to Colorado not just because of that firm that is bringing me on board, but because there's all these other firms. Yep. And then people in these other firms, maybe some of these really talented people that Partners Group is training as an example, say, hey, I'm ready to leave kind of my current employer and do something with a group of associates, colleagues, and start something new. But what I'm going to start is an investment firm. And you're going to start to see that feed upon itself. So one of my looking forward themes is how do we turn Colorado into a geography that's also known for having a lot of capital formation on the ground. And really thank you guys for being a great example of that and the progress that you're making in a very, very significant industry. That's a very specialized industry. It's awesome that you guys are here in Colorado, and I've enjoyed getting to know you guys somewhat over the last several years.
Yeah, no, Dan, it's been a pleasure. Honestly, we love this and I love the effort you're putting into like forming this community. And I think honestly, a great next step is you were talking about this list of investors that you all track. How do we make this public? How do we contribute to it where, we can send in and be like, hey, have you heard of these
This
three
is
firms?
not proprietary. This is like
Right.
we want people
And I
to
think
see and celebrate.
that would be so valuable where, if I was a investment associate moving here and I took a job at, Konvoy, and for some reason I decided that gaming was no longer for me, I would hope that person doesn't feel like they need to leave the state. Hopefully I did a good job. Josh and I did a good job mentoring and growing that person.
Yep.
Then they say, you know what, I want to be more of a generalist investor. I go to the Konvoy Ventures team, right?
Exactly.
That's a win, right? Where I think that's the perspective Josh and I have is let's go get the best from the globe, bring them here, and then let's grow them as much as we can. And if there's a better opportunity for them, let's punt them on over. So
Absolutely.
I'd love that.
Yep.
Yeah.
Good deal. Well, we will definitely be sharing that list and
Love it.
sharing it more publicly as well at the upcoming Denver Startup Week and
Nice.
other
Nice.
forums such as that. So
Thanks, Dan.
thanks much, and
Thanks
good
for having
luck.
us.
I look
Appreciate
forward
it.
to your upcoming conference.
Yeah,
It's going to be
thanks.
great.
Thanks, Dan.
Thanks, Dan.
All right.
Appreciate
Thank
it.
you.
Appreciate it.
Thank you for listening to this episode of The Bear Roars featuring Josh and Jason Chapman. This podcast was produced by Loud Bear Productions and edited by Courtney Caruso with support from Allie Berman, Emily Notaro, and Gibson Siegert.